What is the last mine sale that you've seen being bought by an individual?
On this scale, I can't think of one.
On this scale, yeah.
Righto, money miners. Hope everyone's enjoyed this public holiday spectacular. Another one tomorrow. Go the Anzacs.
It's
Gift that keeps on giving.
Isn't it just a great week when it starts on a Tuesday and it ends on a Thursday?
Yeah. It kind of does each week for me. But just a casual edit on Friday. Right, what do we got? We've got a bit of quarterlies. I've got, Liontown, Paladin yesterday, I think it was. JD, you got a big gold mine sale for the majors.
A barrack sale to a couple interesting characters that I'm going to talk about.
Massive. Mate, from The Big Short, you've watched that.
I was about to say,
Yeah.
you'd never think this relates to The Big Short.
It does.
But it sort of does.
Big gold bull from The Big Short buying a big gold mine.
And Trav, you're putting your beak into a bit of government policy.
Indeed. Yeah, mate.
Hence the shirt.
Strategic stockpiles. Gonna give that a whirl for the few people out there that care about policy. It moves
week
a few
away
equities,
from-
so.
Trav went and had some cornflakes with Albo this morning for brekkie.
Yes, it did.
A week till our election, so pretty topical, that one.
Oh, is that it? Oh, I better go get me bloody democratic sausage sizzle in a week's time. Love
All right,
it.
take us away, mate.
Righto, Liontown, quarterly come out today. So as we've seen, they've been on the lithium journey, but they're still bloody fighting. And I reckon I could sense it. Tony O he's back. I could sense in the call there was the OG Tony O's voice enthusiasm. So
The energy.
yeah, and look, we'll go through the quarterly. I think it's there's a lot of promising things in the quarterly for how they're performing in a depressed lithium market, but we'll get into it. So as you can see here, that they're still hovering around that 50, 60 cent mark. So they actually declared commercial production as of 1st of January for the processing. So revenue was up $104 in the door. So they said positive cash flow generation from operating activities of 14 million. But we'll get into that. I don't know.
It's always positive operating cash flow, isn't it?
Yeah. Well, yeah. Don't see many that aren't. So bit over 95,000 of SPODCon produced. And 64% average lithium recovery, which is up. And remember, this is primarily from open pit dirt at the moment. Yeah, they've cash I'll get into the waterfall chart. Cash went backwards about 20 mil. So first stope was blasted at the start of April. So that's a good achievement for the underground. So you can see their shipped grade 5.2% for the SPODCon. So that's, I think we said earlier, that's sort of what they're going to be. That's sort of the new norm, that 5.2, 5.3. I think it said they produced 5.1 for the quarter, but they've shipped 5.2. Average realised price, US 8.15. And so the open pit, so if you look at the grades is sort of where it, where it looks promising with the underground coming on soon. So the ore grade delivered to the ROM this quarter for the open pit was 1% lithium. They've said and you look at the underground development for the quarter, that was mined at 1.5. So you see photos up in the presentations. I'm not sure if this is everywhere, but I'm assuming it is, because it is such a big ore body. Your development ore grade will probably be not too much different to your stope grade because it's just a big fucking pegmatite. So it's like they're mining an entire, yeah. So you're not going to have like a narrow vein gold mine. Yeah, pretty much that development grade will be close to what the stoping grade is. So they've talked about they did some periods in the processing plant of putting the underground ore through the 1.5%. That's when they said they were achieving over 70% lithium recovery in the plant. So
excuse my ignorance. I'm not across the detail like you, but is there anything to do with ore sorting that's part of that too? And
yep.
Yeah. Okay.
Yeah. They've so when it says open pit mining continued, they moved 2.5 million tonnes. Some of that was clean ore, just obviously pure ore. Some of it was, they call it OSP, the ore sorting product. So that's
gotcha.
Where I think they say the Gabbro gets mixed in. So gabbro's the sort of the host waste rock, which contains the iron, which is what they need to sort out. So they've doing ore sorting, and that was waste as well. So and it said they added the OSP material in with the clean ore as well to the processing plant, and they were able to still get the recoveries with a low iron content. So they were pretty bullish about the plant performance dealing with the sorted ore as well. So the open pit, it says it remains on track for completion Q3 FY26. So essentially this time next year on the calendar year basis. And that will see, and they've talked about they're targeting that 70% recovery by essentially the same period, which means that's when they'll be transitioning to full underground ore. So it's going to be the fact that, like, looking at it as I look very simply, cash in, cash out. They've gone back 20 million, but they're progressing towards the point where the underground ore will become the primary ore source. So if they're, I assume they're targeting the high grade first, as you would in this pricing environment. And so when that sort of 1.5% ore starts coming in, and it's said to have shown better recovery as well, like I think that'll all sort of work in their favour. As I said, they're just basing everything on the lithium price staying the same at the moment. They're not hoping for it. I'm sure they're hoping for a turnaround, but looks like they've battened down the hatches of the business to bloody anticipate that this price stays the same. So, which is probably what everyone wanted to see, because they've come from a very you couldn't have a more bullish environment for where they built this project, and it wouldn't have got built unless the environment was so bullish. So, but this is where they are now.
So digging into the question, Maddie, that everyone wants to sort of hear answered, are we any closer to finding out what costs might be once they go toward being a full underground miner? Because they're starting to make that transition now.
Yeah. And this is where I guess the 5B gets a bit, a bit confusing, because at the moment you look at, they've got, for cash flow from operating activities, they've got zero, and it's just production costs for what is being produced in the open pit, because they're still capitalising all their underground development, even though, so you look at other non-current assets, 27 million for the quarter as part of investing cash flows, but like the ore drives they're putting in will be, once that underground is properly producing, which has just commenced, those ore drives are operating development. So they're being capitalised at the moment, which is not the case. It's obviously the way you can account for it at the moment, but it is literally they will be literally flicked to the top part of that cash flow statement once they start producing. But remember the production costs, once the open pit finishes, those production costs will translate from open pit equipment to underground equipment. So they'll
benefit from higher grade, higher recoveries, but feel it on the unit costs, obviously.
Yeah.
Per tonne are vastly different.
Yeah, and look, you can read into bloody try and back calculate numbers and everything. I'll just try to look at it very simply in terms of, at the moment, they're not really they haven't really hit the 2.8 million tonne that they're going to be at. So when they do get to that, there's obviously economies of scale for the increased tonnage. It's going to be all underground, so there's going to be a grade uplift. You might offset that you've got to offset that a bit with higher costs to mine underground compared to the open pit. So you sort of piece that all together, and you're thinking, well, the fact that they went backwards 20 mil, the 5-year point started in 1st of January for when that Ford facility will have to be repaid. So that's like 2030. So they've still got, 700 million of debt. They've got a lot of it's getting capitalised on the interest at the moment. So it's like, they could probably make this work at these prices. It just feels when they go fully underground. So it's not like they're going hemorrhaging money and going backwards, because they're they've developed the underground with 2 jumbos. They haven't, different to Bellevue, which have gone 6 jumbos. They're like, right, we have to we've got to get all this developed. A lot more rabbit warranty, a lot more costs, a lot more pressure. Whereas this is just ticked along. They're hitting over 300 metres a month. They've got to the first stope. lot of the ore development, like much bigger. They talked about the first stope being, I think it was, I'll show it in the call. I think it was like 12,000 tonne or something, or maybe less. And they're talking about the future stope's going to be 80,000 tonne, which are like, so it's like for that ore development, you're getting you're getting good bang for buck for when you get there because it's a bulk mining scenario. So, yeah, I don't know if I've just unanswered the question I've given myself, but it just feels like they're in a position to, survive this depressed period. What Joe say, even Big Joe Lowry said 2025, even he doesn't think might be a spike. They're predicting a spike at some point, but looking at this quarterly, I feel like they've got everything in place to get through this period. And if lithium price does go up, they're the first beneficiaries for it, just like PLS, because they're producing, and Greenbushes.
Very interesting. How about if we look at the plant now, because I saw announced commercial production for the processing plant.
Yeah.
And I think from quickly skimming it, they did a bit under 600,000 tonnes through the plant this quarter.
Yep.
And given the rejigging, they were now targeting.
I think they were going for, weren't they?
Yeah, so they're under nameplate on that front. Was there any sort of standouts from the call that spoke to that, or production in general?
No, look, they've said they've got 91% plant availability. Like they've still got, they got 1.3 million tonne of clean ore and OSP stockpile. So it looks like between the underground ore trial, then adding the OSP material in, it looks like there was a bit of trialling going on to see what they can get away with in the future. I reckon if you add all those together, that would probably contribute to, you probably want to build a bit of a stockpile as well. I think, and recovery is always was the biggest thing. So the fact that they're nearly approaching that 70%, which is, 70% in a flotation plant is what you'd take any day of the week. So, yeah, I think it's all probably looking pretty positive. There's a bit of money that's gone in to make it that good, as they didn't really spare any cents on building this project. So I think everything's pretty ridgy-dig. So all heading in the right direction. I'll play a comment which this was a narrative going around that I'll just play and then I'll get into it.
Morning, Tony and team. Just firstly, could you make any comments around how the blast went in your first stope? I mean, there's obviously been lots of concerns around how it may go, whether it'll fracture. You obviously talked to us about having the thin layer around the outside, which will give you some benefits. So just how does that actually physically gone?
That's a very good question, Glenn. And both Adam and myself spent last weekend on site so that we could go and have a look at the first stope and the blast. And we were very, very happy. It was clean breaks, exactly how we predicted it. The team's got some more fine-tuning and optimisation, but the fragmentation, I'll let Adam speak to it, but it was almost like...
I think we're calling it sugar.
Sugar.
Look, really, really, really good fragmentation, very clean breaks. They're looking at revising some of the way they drill underground in terms of the overdrill. They're looking at how much of a skin they leave. But certainly recovery from the stope was excellent. And there's a lot of learnings from that stope. So that initial stope was about 12,000 tonnes, to put it in perspective. It was a fairly small one from what we're going to see going forwards. But yeah, very, very encouraging.
And the other point that we would make is, again, this is the differentiation between narrow vein mining of gold versus what we're doing. That one stope, that 12,000 tonnes, that's 2 days of production just from one stope. And that's a baby stope. We've got stopes coming up in the next financial year where they're close to 80,000 tonnes. So this is an opportunity for this mine to really get economies of scale.
Yeah, so I remember that going around before, like when they were leading up, everyone's like, "Oh, lithium's never been mined underground before. Is it going to blast out?" And I was just, I don't know. I'm like, fuck, am I missing something here? Like I think it's different. It's because it looks like a quartz. From what I hear, it does take a bit to blast out the development. But if you can get the development heading to fire out, which is the hardest thing to fire because it's very confined and you got bugger all void to start with, like the bloody stopes they're just big friggin'. Once you get the slot open, she just. So they talked about it. They went up to site and she was like sugar. It's looking. I just sensed a bit of bullishness in their voice about. I reckon they're pretty happy with how it's going operationally, considering.
Second quarter on the trot. Last one was, a bit more positive. People feeling quite good. Yeah. There was a good tick up on the last quarterly. So we're one step closer to finding out what the final piece looks like.
Oh, and I reckon they're probably like shit. We're still alive in this. We're ramping up a project in a friggin' an environment where lithium mines are going potentially shutting down. So if they can survive this and get themselves in a position, I reckon I'll be feeling pretty bullish for the performance of everyone as well. So paste plant is getting commissioned in May. So that's going to be the integral part of that underground because it is a bulk thing. So, because look, after personally witnessing a paste line being blocked on the first pour like that at De Grusso, just didn't come out. And we spent 2 weeks.
It didn't come out.
With my hands, because I think I was doing my underground time then, or I was doing shift bossing time or something, with a sledgehammer, like hitting the fucking thing, trying to loosen up all the paste and having to flush it out to unblock this line.
Was it the system at fault, or was it the
just the initial bit of paste that was just went down wasn't supposed to, obviously wasn't the right thing. But it could have been avoided with a Quattro QD2 valve. Because with the automation up to the paste plant, it would have detected the pressure spike. And before it got to the point of like, holy shit, what's happened? It would have automatically dumped it into a sump, and I wouldn't have had to have used my bare hands to unblock this pipe for 2 weeks.
2 weeks.
2 weeks.
So 2 weeks it took to bloody unblock the pipe because you had to do it in like 20-metre sections. They had drills with these metal things on it to rattle it and then you had to send a flush down to flush it, then you had to hook another chunk back up, then you had to, it was a freaking...
So the cost of not using Quattro is 2 weeks down.
Well, I don't know if the QD2s were as big of a thing then. They weren't rated to the 1500 that they're rated to now. I can tell you that because that's
for any mines today though.
Oh, mate, you may as well if you want to run your pace line without a QD2s in all the critical points, hand in your resignation, and because you're just not worth being on site. You need Quattro QD2s to protect your retic line.
That would keep you up at night.
Oh, mate, go work. Yeah, you won't be working in the mining industry if you don't put them in.
Some bits of infrastructure you take for granted, but mate, Quattro's got you covered because this is their specialty.
Mandatory.
Yep.
Mandatory. It's just like blowing zeros in the morning. It's a mandatory requirement, just like having QD2s in your system. So
thank you, Quattro.
Oh, there we go. So yeah, good on. As I said, it's been heavily covered Liontown, but fucking any ramp up if they're hitting targets and something that's as complex as that, pat on the back. Good stuff. Helps when there's fucking 2 jumbos instead of 6.
It all helps.
Righto, JD. Barrick's sale of their Donlin stake.
We're going to North America, lads. We're going to Alaska specifically. So I'm not sure if you guys have heard of Donlin before, but
I've never heard of this project.
Massive undeveloped gold project in Alaska. Like I said, been around for a long time. Probable reserves of 33 million ounces.
Wow.
At over 2 grams a tonne. So
how has it not been built? Over 33 million ounces at over 2 grams.
There's a big price tag to turn that into an actual mine. So the plan that they came out with in their latest numbers in a 2021 study was for 1.1 million ounces per annum for 27 years. So big scale production. Granted, those numbers have obviously not been refreshed for a few years now.
My God. And
it got close in the bull run leading into 2012. The numbers came out, that sort of technical report 2009 and then 11 and then 12 again. But like we've spoken about in the past, the market got away from them. The gold price just crashed. And here we are, still undeveloped.
Well, at face value, it doesn't seem like the sort of like just off that, it doesn't seem like the sort of asset that Barrick would want to part ways with if it's got enormous production, you got scale. Like, what's the catch?
It is an interesting one. I was sort of trying to answer the same question because, you know, what makes a tier one, these sorts of assets that companies like Barrick, one of the biggest gold producers on the planet, want to produce. And it tends to be, you know, costs in the lower half, preferably lower quartile, 500,000 ounces plus, tier one jurisdiction. So it meets a lot of those those criteria points. But
Must be cost.
I think it's the massive capex and the fact that Barrick seem to be pretty content with Reko Diq going down that route, and they've sort of got their eyes on being a copper producer as well. I think for a sort of confluence of those factors, they have elected to sort of part ways with this one, and I take it they're pretty comfortable given this bull market we're in gold now, just to take their chips off the table. Like they sort of inherited the asset, as I kind of understand it. They're through acquisitions and those sorts of things. So that's how we find ourselves here.
Maybe Alaska. Maybe they're like, look how long, on a much smaller scale, Northern Star with Pogo. I know there's plenty of other assets. They might be like, oh, geez, could take a bit after the CapEx socially to get this up to this level we want to get it to.
That's a really good point, Matty. I'll put a pin in that for now, and I'll talk about that later.
Beautiful.
And try and understand what the buyers of the asset think about the jurisdiction. So I'll run through the deal to start with. Donlin was formerly held 50% by Barrick, 50% by Nova Gold. So a much smaller North American Goldie, with this being their flagship asset. Now, Barrick have agreed to sell their 50%, and the buyers of that is mostly John Paulson, famously the manager of Paulson & Co., who made a couple of dollars in the financial crisis, and Nova Gold taking up another portion. So the outcome is that Paulson, through his family office, will own 40% of the asset, and Nova Gold will own 60%.
So what is the last mine sale that you've seen being bought by an individual?
On this scale, I can't think of one.
On this scale, yeah. Yeah, like the deal itself just reminded me of that that hedge fund guy who owns that Oren Group gold mine in near Mount Ida here in WA. That kind of like mysterious one, but this is like completely different.
This is out there.
But it's a hedge fund guy, like big gold bull, just getting max leverage, max exposure to gold.
Yeah, and to talk to the scale, why we say we haven't seen one this big, is because this 50% has sold for US $1 billion. Yeah. And there's a potential another 100 million that Nova Gold can chuck in relating to debt that Barrick chucked into the subsidiary that held the asset. But the reaction to Nova Gold's share price has been phenomenal. So they have surged. They've doubled in the last couple of weeks. I mean, they'd come off into that sort of tariff blip that we kind of saw, but they're now capped at US 1.6 billion with a couple of shares that they're raising to fund their $200 million portion, not having settled just yet. They're a really interesting company in and of themselves. So they've got this chairperson in Thomas Kaplan, who is reported to be a billionaire in his own right. He owns 25% of the company. People might have heard of Electrum. That's the investment unit that he invests through. He's been in the natural resources space for quite some time, made money, like I told you lads earlier, in silver through the 90s and 2000s. You've also got Kopernik Global. Now, I spoke about these guys a couple of weeks ago. They were topping up their stakes in some of the uranium miners, specifically Paladin. Yeah. They were early to the uranium trade. They're sort of sold out. Now they've bought back in, given everything we've seen. They've been sort of getting more and more bullish gold. They're value guys. They look at PGM. I mean, they hold Sibanye and other sorts of companies like that. They manage a fair bit of money. You know, we're talking 5-ish, from what I could kind of gather, billion US dollars under management. And they're deep value investors. We've actually included a couple of their really interesting white papers on why they like mining and how they invest in mining in our newsletter. So the capital raising that Nova Gold did to fund their portion of the acquisition was for US $170 million. Now, 3 parties took this up, the 3 I've just mentioned. Paulson, so he's investing into Nova Gold, as well as buying the asset. Thomas Kaplan and his unit, so the chair of the company, as well as Kopernik. Now, that was a tight capital raise, just those 3 getting it. The stock has surged 60% since they tipped in. They all got themselves some 5-year long-dated warrants as well for their trouble. So
are they in the money already?
very hard to find info on what those warrants were. I mean,
There's a good chance they will be if they're going up 60%.
yeah.
Is there, so would, question without notice, based on what Paulson put into Novo, is that giving him more than half of beneficial ownership of the asset?
I don't think so. So he was an 8% shareholder in Nova Gold before this capital raise.
Yep.
And whilst they said those three tipped in for the 170 million, they didn't say who got what proportionally.
Okay.
But I wouldn't think so.
Right. So as we've alluded to, an individual or a family office buying a stake in a gold mine would have been like bloody Willie Packer taking Jabiluka. Like,
he's got LPs, I guess, but I don't know if John Paulson has LPs.
Well, I suppose family office is a very tight knit unit, isn't it?
It's his money, yeah. So he shut down like Paulson and Co. and he essentially booted out general investors in the funds. So it's just his money now, which is fascinating. So
That'll be you one day, JD.
Might be all of us. Let's see. Yeah. Fingers crossed on that front, Matty. But I think it's fascinating. So like you guys said, people might know him. He made money through the financial crisis. It's very interesting how he structured his bets and everything. If you are kind of wondering about that, he's not too heavily featured in the movie The Big Short, but there's a book called The Greatest Trade Ever, I think, and that's specifically about his angle. So it's another perspective on the financial crisis to Michael Lewis's retelling of it. And he subsequently became very bullish gold, and he's been bullish sort of gold for a while. You might have also seen his name in the media because he was rumoured to be in the running for Treasury Secretary, which Scott Bessent is, of course, now, but he's been a backer of Trump for some time as well. But anyway.
He's not related to Hank Paulson.
Not related. A lot of people asked that question back in 2005-06. No, I can confirm he's not. So the gold trade from his perspective is really interesting. He set up a gold fund back in 2010 after the financial crisis and started buying massive stakes because obviously he did very well out of the financial crisis and his funds just grew enormously, like over $30 billion he was managing, closer to 40. And he bought stakes in like Anglo Gold Ashanti, over 10% stakes for over $1 billion US, like closer to 2 billion Aussie. So he just went in really, really hard. And it's interesting to reflect on those times and read some of the comments from some of the people involved. So I plucked out one from Mark Kudafani, of all people, who was running Anglo Gold at the time. And he said, hard currency is coming to the fore as evidenced by the investment choices of some of the world's most seasoned investors. Now, you might have heard that today or yesterday, but that was said, over 15 years ago.
I just had a flashback
Yeah.
from underground operators. Sorry to interrupt.
No, please.
But Mark Kudafani was floating around.
Did you have a chat?
I might have had a skinful at the casino and he was going home. I'm like, hey, Mark, make sure next time you come on Money of Mine, I'm there. Sorry, I was a bit under the weather that day. He's like, who the hell's this bloke?
Yeah, I remember that podcast.
Anyway, continue.
We digress. So, yeah, the gold trade moved very much in his favour in 2010, 11, 12, and then it started peeling back. And, people were sort of bullish gold for all the same reasons, but the timing wasn't quite right. And then, we came into an era of massively, massive fiscal easing across the planet, and here we are. But despite this, he's sort of been bullish throughout. And, you can go back to 2018, did a massive investment in Detour Gold, over $500 million. And this is when his funds got a lot smaller. So that's a massive check to write. I mean, he owns stakes in a couple other companies. I'm not sure if you guys have heard of Perpetua Resources. They are capped at about $1.3 billion. He owns 35% of that one. He's got quite a bit of cash in Agnico as well. Of course, Nova Gold. So, yeah, I just find this fascinating. He was on Bloomberg just last week talking about gold, the narrative that central banks would just keep on buying and buying gold. So, I think he's deservedly called a gold bull or a gold bug on Wall Street.
Yeah, and this is the best leverage you can get to gold is owning a gold mine.
Absolutely. It's
Talk
such
about leverage, like the scale of potential production here, and if it was high cost and as prices rise, that's a tremendous difference to the valuation of this asset.
Yeah, and it's also an asset that had a handbrake on it because Barrick weren't doing much with it. Like they were going through the motions. So consolidating the asset, you've seen it in the reaction of Nova Gold's share price. It's just put a lighter on them. They've gone sort of flying. So,
and it's not like a huge number really. Like for high 30 million ounces, 2 grams for what, a $2 billion US project valuation. Like it's not huge dollars.
No,
considering Spartan went for 2.5 Aussie.
Yeah, so the key distinction there is the capex, right, which is $7.5 billion US, 2021. So a bit of inflation on that one, but yeah, the high tide of gold prices is really changing the economics. So they're going to refresh the feasibility study of this one over the next 2 years, and then they're talking about a 4 or 5 year engineering and construction timeframe. So early 30s, talking about production, which is of course, it's going to be around sooner than we think. And like I said, the numbers have been run through this already. The reserves are virtually the same as what they were in 2009.
Yeah. They've
got stacks of data, like 350,000 meters have been drilled in this thing. They know a lot about it. But the 2021 numbers, like I said, big capex, NPV at 5% was US $3 billion, which left it with an IRR of just over 9%. So that's enough to put most people off, even BHP, So that was using a US $1,500 gold price.
Jesus.
Which is not the world we're living in today. And the all-in sustaining cost was a touch under US $700. So again, inflation adjust all these things, but 20 million tonne per annum plant, pretty much. Big scale, leverage to the gold price, and you can start to run different numbers and different scenarios. We'll flash up what different gold prices would do to those numbers at the time, and you can see the economics change quite substantially. And in any case, these guys are gold bulls, so that's not the thing they're worried about. They're just thinking about the best way to play it. They want leverage to that gold price. So they're fixated on eliminating the risk here, right? And to your point before, Matty, on jurisdiction, you want to pick the bet and make sure you're going to get paid for it. Just like Paulson was thinking back in the day how he structured his housing bet. You don't want to do it in, let's say, Mali or Niger, where you're worried about getting paid. You want to eliminate the risks. And to that point, Alaska is an interesting choice because it wouldn't be the first point on everyone's list, but maybe they've got a way of navigating the social parts of this, the permitting parts, because that is undoubtedly a huge part of unlocking the value here and bringing those people in the local communities along the journey with you. I mean,
especially for a big pit, like surface disturbance,
exactly
is the hardest thing to permit.
So you want to bring the people along with you. You want them to be involved. You want jobs for the local communities. You want them to be compensated and see some of the upside as well. And if you think it's going to be a big payout, like I suspect they do, then you might just have to break a bit off and share it round. But I'm sure that's all the stuff at the forefront of their mind now that they're actually thinking about refreshing the numbers. So for all those kind of reasons, I just think this is a fascinating deal.
Yeah.
Really fascinating.
It'd be about, is it over a million ounces, about 1 million ounces a year?
1.1.
Yeah.
Yeah.
And 20 million tonne at 2 grams, that's, yeah.
Yeah, and they're gonna front weight that, as you'd suspect. So the first 10 years were about 1.4 million ounces.
Wow.
So
like bigger than Porgera.
Enormous.
It's phenomenal.
Up there with the biggest in the planet.
I know it's a 20 million tonne plant, but that capex is enormous. Heaps of that must be pre-strip, right?
I mean, this is in a very remote part of the world. Yeah. I think you need to develop a bit better access than what they've got at the moment. Strip as well as tailings and all those sorts of things are pretty substantial. We'll chuck in another schematic in there so you can get a feel for what the operation might look like.
I'd be interested to see about like the because I'm pretty sure Pogo, they all their tailings have to go back underground. Like there's no surface. So these guys depositing of tailings.
These guys do have surface from what I could see at the time. Yeah. I don't know if that was a hold up on permitting, and that's something they're going to try and address. But there was also backfill taking place in certain parts as well through the cycle. So remains to be seen.
That I'm like more just alluding to how strict the permitting for just like you just can't just chuck a tailings dam in. No. That easily, like you can't chuck it easily in Australia, let alone Alaska.
Yeah, and
you
think
can
about
in Serbia apparently.
Yeah, Serbia, the rise of Serbia.
Sorry, Bosnia, and yeah, my bad. I got it wrong. They are neighbouring. Someone's going to kill me in Serbia though.
Maybe in Bosnia too.
Especially with your links to your mates in China.
I think the other point would be like Pebble Creek is not far, and that's been in permitting hold up for God, how many decades now? So water bodies, rivers, these sorts of things need to be very carefully studied, and I'd imagine they've done a lot of the work since this thing was discovered over 20 years ago on those aspects as well. But I'll just leave it with a chart that they chucked in. First time I've seen this that I can remember at least, and they're flexing the numbers with a discount rate of 0%, just to show you the cash flow that this thing could potentially generate. But maybe that's a gold bug mindset.
You asked me if I remember this project. I didn't, but I do remember that slide. I've definitely seen that slide posted on Twitter. Yeah, that's hilarious.
Yeah.
Yeah.
Good one, eh?
Yeah.
It's you think from a barrack perspective, when you put the permitting and the time frame of it, you're like, fuck, we could probably deploy our capital a lot better to get a sooner return, because this could go for a very long time to get this developed.
It's going to take him probably an equal long time for the fruits of Rico Dick, but that's the horse that they're betting on instead.
Yeah.
And you've only got so much free cash flow to actually reinvest. So.
Yeah.
No snow at Pakistan. That's the benefits of Rico Dick. I don't think.
I think it's a bit colder than you think. It's up in the mountains there. But
Oh yeah, maybe.
maybe no snow.
Egg on my face there. Does it snow in Pakistan? Let me know. Right, let's go. Paladin. I think it was out yesterday. They've had a bit of a run. So all the U stocks are having a bit of a run. It's whether that people are thinking, is the $65 spot price the bottom out? Who knows? But there's a bit of volatility on the U stocks at the moment. So Paladin went up yesterday on the back of this. So looks like their production-wise, their quarter improved a lot. They did have the too much rain event. They had not enough water previous quarter. Now they've had bloody too much. There was a 1 in 50 year rain event. But even with that, they processed 900,000 tonne. Feed grade improved, 419 ppm, up from 404. Recovery's going good, so they produced 750,000 pounds of uranium. Realised price $69.90. So I think because they've got a lot more contracting in place, they're not chucking it in the spot as much in the spot. So cost of production went down. So you look at the waterfall chart. I was just trying to, again, me dumb thinking. They're processing stockpiles only. They've just fired the first part of an open pit, not the original open pit they were planning to go into, because that one got flooded. So they're into another one now. But if you take away that money from the fission acquisition, the 81 US that came in from that deal, it sort of means on a 6-month basis they still would have gone backwards about 8 million. Is that right? Yeah, about 8 million US gone backwards. And it's like, okay, what does this mean for one Paladin and the rest of the Namibian hopefuls? Because they've just been processing stockpiles. Yes, it's in ramp up. It is a brownfields project that's being restarted. They're processing 400 odd ppm from existing stockpiles. So no mining costs. They're just rehandle and throw it in. And they've sort of gone backwards at these prices. And I'm just thinking, overall, I'll skip to the end. I'm like, okay, well, if Deep Yellow are proposing 340 ppm mining and Bannerman are proposing 240 ppm out of their open pits in Namibia, again, while we're at these prices, and it's been reaffirmed by Deep Yellow postponing their FID, like these projects are just not even going to be considered to be developed if Paladin aren't making money reprocessing stockpiles at 400 ppm. So that's essentially my overall conclusion. So like there's not, when we're talking about what is the incentive pricing for these projects, like it'd have to be pretty close to 100, I would imagine, to consider deploying a shitload of capital to build these projects and process low-grade open pits. So that was sort of where I got to.
Yeah,
just to
well said, Matty. What was the grade of the reserves that they are going to mine?
For Paladin,
Yeah,
about 500.
500.
So they've talked about there's like 800 pockets that they can go to start with, but I think they said in the call that they're targeting to try and maintain that 500.
Yeah, you go to those higher pockets and you
where you
go
just-
lower later down the track, right?
You know, Rob and Peter to pay Paul
Yeah.
later on. So they're so I think once the tonnage sort of increases and they're in production, it'd be interesting to see how this goes. But it's not like, it's another one of those situations. It's like the purpose of mining these stockpiles was to generate cash flow to help set themselves up, but they've ended up losing money by doing it. But they've lost money, but it's a commissioning process as well. So it has to be done at some point. So you may as well lose money while you're processing lower grade and make more money when you're processing the higher grade.
Nevertheless, the stock jumped 18% yesterday.
Yeah. So
I think it was even higher. I think
It might have been that was
Yeah.
so
Yeah,
high. That was
yeah.
when I looked.
25. But it was funny, you go on a 1 month time frame and it was still down like 20-odd%. But
Yeah.
the daily volatility is, I guess goes to show how volatile things can be when you've got the high short interest and a bit of short covering, you can squeeze a bit.
Yeah, well, I think the short, and while these stocks have been down at these levels, the Aussie-based ones anyway, Boss, Paladin, Deep Yellow, I think the bloody short interest has kept on climbing, so they're continuing to pile into it, whatever the mechanism or trading mechanics behind that is. But I think, as you said before, it goes both ways. When the price is going down, there's more shorts piling in, and then the price is going up. It's one of those. It's just such a concentrated set of companies you can do it to. Hence why all the narrative goes into a small amount of stocks, because there's not many bloody mobs that are producing or that have a big enough market cap that are indexed to do it. So looking at this bloody water, you can see how that appeared to be, I think the bottom left photo, I reckon that might be the pit that they were going to mine. So you can see how much freaking rain they had. So they've got to pump that out. This is probably the one place on earth that doesn't need Jerry James at the moment to find water, because they've got a shitload to deal with here. Like, there's no shortage of water this quarter. At Langer Heinrich. They once it dries out and they start relying on NAM water again, maybe Jerry James and the WA water boards, if people don't know, the best mud rotary drillers in the world, maybe might be a bit useful over there. Take the reliance off NAM water. The best thing the Aussie mining companies could do right now is get Jerry James working for them so he's not forced to go to Namibia, because once he's over there, it's a big flight back to get the beer back.
Big flight back. And in Namibia, they need bloody the desal plant there, mate. James helps you avoid the need for desalinated water, because he
finds your fresh water.
He finds the fresh stuff.
Yeah.
You didn't even know it was there. He found it.
He's got revolutionary proprietary salt detection technology on his mud rotary equipment. So you just drill another one, 2 sail on. So
You don't want the water, he'll get rid of it as well.
yeah.
I once asked him for the tricks of the trade, and he said, "Can't tell you."
No.
But you learned it growing up in Geraldton. That's what they teach you in Geraldton.
It is,
how to
mate.
find water.
All about water. Considered WA water boards water hedging. Just thanks, Jerry James. It's good to have him. Been great to have him back for a couple of months, the bloody legend.
Called WA Water Boys.
Right, what do we got? So, Trav, you're this is a bit of a bipartisan segment, is it?
Yeah.
How was breakfast?
I'll get to that.
I noticed that you tried to force this onto JD, and when you were out of the room, he respectfully declined it to Ali. He didn't do it in front of you.
No, yeah.
I don't think I went out of my way to.
It was cool. It was cool to go. That's for sure. So I'm appreciative of that. But not sure if you guys caught this policy news surfaced last night. Grabbed some headlines again this morning. Moved a few stocks in its process. But the Australian election literally just a week away, and so the policy announcements from the Albanese and Dutton kind of ends keep rolling in. And last I checked, the the incumbent Prime Minister, Anthony Albanese, is the heavy favourite. Polymarket odds are 83% for a return of a Labor government. That has implications on our industry that we care about and the miners that operate within it. And so this policy announcement matters because it came from the Labor government, which means it's likely to become an actual policy based on the current betting odds. The announcement I'm referring to is that under a re-elected government, Australia will create a critical minerals strategic reserve. What does that mean? It means they're going to increase the existing critical minerals facility by another $1 billion. They're going to spend initially $250 million literally building a stockpile of critical minerals, not sure which ones. Here's where things get even more spicy. Through national offtake agreements, the government will acquire agreed volumes of the minerals from commercial projects. And there's also going to be selective stockpiling process involving specific critical minerals deemed necessary for national security. As you might imagine, I have a few thoughts about all of this, and big thank you to the AMEC team who invited me to sit on their table at a breakfast this morning, which was put on, big song and dance put on by the West Australian. They do this thing called Leadership Matters things. And anyway.
It's a bit of a right newspaper, isn't it? Which is...
aren't
they?
They are a newspaper, yeah.
But they're a right-winged one.
The West.
They're a bit centre right, aren't they? They're not, or are they more left?
This isn't supposed to be like a partisan event. It's just the fact that it's like, they did one a month ago and they somehow got Twiggy to speak at it, and you would have noticed because Twiggy spoke at it, the West kind of toned back the anti-Twiggy hydrogen stuff that they've been writing before.
So he rocked up.
Yeah, so there's that's just the way that the media works here with Kerry Stokes' influence in it all. And anyway, so there was this big event put on. It was a breakfast, thanks to Warren Neal, Ryan at AMEC who let me sit on the table at the brekkie. Albo goes up and he talks about his like policy settings to this room full of people at the Crown Ballroom, all having breakfast, and he made a big song and dance, especially about this policy. But before I share my thoughts about it, I thought I'd get your initial views.
Well, I'd love to. You're obviously way more in the weeds than me on this. I'm just thinking, okay, what? Don't you usually have a critical minerals reserve for if you've got a big downstream component in the country to feed it into, which we don't? What the fuck's it for?
Yeah, got similar kind of concerns. Like, it makes sense if it's oil that you need for your country, so you shelter yourself from shocks. But initial concerns are just fear that government starts picking winners. But I think we've also got to understand that the world is moving to a more geopolitically fragile sort of space, and it makes sense to sort of protect ourselves and look out for our interests and partners that align with us. But I tend to be filled with concern about the decisions that made on how we actually get there.
Big time. If you have a quick scan of the share price movements of the local rare earth stocks, so Iluka's up 5% today, Lynas up 1%, Arafura surprisingly flat, Northern Minerals up 13%. Kind of gives you a rough idea of what the market thinks today will be the big beneficiaries of this policy, right? Iluka, to me, is the elephant in the room because remember their Eneabba refinery is by miles the dominant use of any funds from Australia's critical minerals facility already. That critical minerals facility was created recently, only in 2021, and it was created with $2 billion to allocate. Eneabba got announced, and that alone accounted for 1.25 billion of the 2 billion committed just for Iluka. Never fear though, the Albanese government doubled its size to 4 billion in 2023, and now it's set to reach 5 billion after the election. Clearly, all the while, Iluka has been very transparent about the fact they need even more money from the government to push ahead with Eneabba. What was initially supposed to cost 1.2 billion has already risen to 1.8 billion by Iluka's latest admission, and the government increased their non-recourse loan to 1.7 billion. So we're good for it. Don't worry. Just for a moment though, let's disregard I've talked about my concerns on the very optimistic ramp up assumptions underpinning a phenomenally complex operation there, but we'll put that to the side for a moment. There's a commercial flaw in this entire refinery proposition, right? Who is going to buy the product? Who's going to buy the product? You're producing something. Who's going to buy it? And Japan doesn't need any more. Like they get their fill. China is the only buyer. Eneabba needs Chinese buyers of their product because they're the only buyer. no other buyer exists, right? So if you're building this for your supply chain independence, yada yada yada, one of the conditions of the Australian government money is that it's got to be to, he's like, certified buyers or friendly buyers, which basically means not Chinese buyers, right? But they're the only buyer. And so if you've got this big commercial roadblock of you're going to build a thing to produce something that there is no buyer for in your version of the world, well, guess what? That's where the government comes in, because they're going to solve the problem by buying the product themselves. That's what the offtake is. The government commitment to buy the product or the volume at a specific price.
Well, what you mentioned the other day that America won't even be able to buy all of Mountain Pass's. Like they consume all Mountain Pass. Even Mountain Pass has got leftover rare earths. Yeah, it's not like it's going to go over there.
Well, that's what they're banking on. They're banking on this being the bargaining chip as Trump induces downstream demand in America, but doesn't greenlight mines that we're going to be the ones that can facilitate and send our product there so that they can build their magnets. But it's not
ages away.
You're not setting up the incentives in the most straightforward way. You're trying to get to the outcome kind of first, and encourage these guys to build. You're hoping that they do the same over that end, but there's a lot of pieces that need to fall into place for this to work successfully. But this is part of the tariff war. If
all of a sudden you have your own supply, you don't need China for XYZ, then that gives you more leverage in negotiating the bigger picture trade stuff. But in terms of like the actual allocation of funds here, you need me to spell it out. The government is funding the development of this. So it's the government's money that's going to build this refinery, right? And as the costs keep blowing out, we now have precedent that the government will keep writing the check for the cost blowouts, as they have happened so far, and in my opinion will continue to happen. And when they produce something that there is no buyer for, which will happen, the government will be the one to buy it. They're going to buy the mixed rare earth oxides that come out of any other, if they come out of any other. There is no productive use of any of that money. There is no product that consumers or industry are buying to manufacture something. That is, the government's lending them, providing the money to build the thing, to produce the thing, and they're going to buy the product for that's not going to get used for anything other than stockpiling.
In maybe 10 years' time, they'll sell it to America.
Who knows? I can't be cynical. It's a public sector circular reference dressed up as kind of pro-business policy, and I find it incredibly disappointing that this is the level of policy kind of ingenuity that we've got in our country.
It's a headline grabber, right? That's all it's designed for.
As I think you mentioned before, JD, why aren't they leading into our strengths of mining dirt and shipping it? That is what we do best in Australia.
Perhaps this is why we don't like talking about politics so much. It can be a bit frustrating, right? Especially the week before an election when you're trying to take the initiative and grab the headlines for your party. Ends up, kind of being a bit frustrating to talk about, because I think some of the policies are short-sighted. Some of them are just sort of baked up with not a whole lot of thought out structure on what this actually means and what this is going to mean for the companies and the market and the country.
So it's cool. All very well timed, this announcement, the WA lunch.
Yeah.
It's all a big lobby for the WA vote, eh?
It's just the typical election trail kind of thing. And I think there's a lot of low-hanging fruit policy stuff that could be had that benefit, the industry in a very meaningful way. Things like permitting timelines, things like removing a bunch of the red tape involved.
Common user infrastructure.
Things to encourage investment that actually, provide ways for protected, external capital to build and invest and all that sort of stuff. There's real low-hanging fruit that makes a world of difference to the equations for a lot of mining companies and investors out there. But this is just an eye roller, in my opinion.
Was there anything in the breakfast about streamlining permitting and project development in Australia?
No, that's if the money miners are interested in knowing more about that, then let us know, because there's a bit to be said about all of the dismal state of over regulation of our industry. There's a if permitting or native title or heritage or whatever, all of these things all combined, if they all of a sudden increase your timelines by 3 years to 4 years, what does that do to the IRR of any project? Nothing is financeable, right? Like it squashes capital investment and the ability. Like if you don't get capital, then you don't have an industry. Like if new capital is not willing to write a check because the timelines are not sufficient to get a reasonable return on the risk you're taking, like it just kills investment. No capital, the industry suffers massively. I think there's a big issue there and a lot of deregulation that could be had. But the big trend on both sides of government is to add more regulation to our industry, not less.
Mm. Yeah, I don't think any of us will stop being on the side of this debate that we're on and thinking and doing what we think is kind of right. But I often think back to sort of comments I heard from the late Ken Talbot, and he sort of left Australia for an investment perspective 20 years ago because it was just getting too hard. And that is the way that Western countries move in. And I think there was a bit of realism in his decision making there that's worth kind of pondering on. Not that should stop us for sort of sticking up in what we think is right, and that sort of responsible mine development.
Yeah. One of the election announcements that I did here last night, that was whoever the Prime Minister is going to be will be attending the GRX conference. That was announced last night.
There you go, mate.
22nd of May, the election will be done. Whoever gets elected will be at GRX in Brisbane. So come say good day to the Prime Minister with me.
If meeting you wasn't incentive enough, then that surely tips him over the line.
Jeez, but that could be another signed T-shirt. Me and the Prime Minister. We've already got me and Gov. So get your tickets, use the discount code in the show notes. GRX, the Centre of Tech and Innovation, and the Prime Minister's going to be there. We've also got our partners, Mineral Mining Services, great partners by the way. Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, WA Waterboards, Quattro, KCA, Black Diamond Drilling Services, and Cross Boundary Energy.
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.